Good afternoon, everyone. Just a quick check. Can folks hear me and see the title screen?
Yes.
Excellent. I'm going to wait just another minute or two before we start, and we'll get underway. Just want to make sure that everybody gets into the room who has signed up for this session. Okay. Good afternoon, everyone. Welcome to the Flood Forum, and wherever you are checking in with us virtually today, I hope you're having as beautiful a spring day as we are having here in Maryland. Of course, we're here to talk about the peril of flood on this beautiful spring day, but as we are getting ready to go into the formal hurricane season before too much longer, the topic is certainly appropriate. So once again, welcome. Thank you for participating today. We have attendees in the forum today from a wide variety of stakeholder groups, including company and producer representatives in both the admitted and non-admitted markets. We have government agency and municipality representatives. We have educators and consumers, and I'm sure a host of others. I want to start with a thank you and acknowledgement to Commissioner Bahrain and my colleague, Associate Commissioner Joy Hatchett, and her team at the Consumer Education and Advocacy Unit for putting together this event. Joy, who we affectionately refer to as the queen of all things disaster related, has gathered an excellent group of subject matter experts for our sessions today. And we certainly are happy to have all of you here and hope that you will gain some useful information and insights in the sessions you've chosen to attend. Before we dig in, just a couple of quick obligatory housekeeping reminders for anybody who may have joined late and missed Craig I's opening. Please be sure that you are on please make sure you have your mute button on at all times when you're not speaking to assist our sound quality. And we do have a chat feature in place today for your questions. We encourage you to use that at any time during the presentation. We will save some time towards the end for questions and answers, but by all means, interject it at any point. I have some assistance today from Jocelyn Strand, who will monitor our chat feature and let me know if I've not seen a particular question. If we run short of time, or if you prefer to raise a question offline or desire a more private interaction, my contact information is on this title screen. You can always reach out to me by email or phone It looks like the phone information might be a little bit gray, so that's 410-468-2353 is my direct line. Feel free to contact me at any time, and whether it be about today's flood event or anything P&C related, and we'll be happy to try to assist. We are recording today's sessions as well, and the recordings and the slides from each session will be available on our website. And I'll tell you a little bit more about the Insurance Administration's website at the near the end of our presentation. For those of you who may not know me at all, my name again is Robert Barron. I am the Associate Commissioner for Property and Casualty at the Maryland Insurance Administration, and have been in that role for the last 4.5 years. However, I've been with the MIA, it's now over 21 years, and I have over 35 years, I'm somewhat sad to say, over 35 years in the property and casualty world. Before coming to the MIA, I had about 15 years in with various insurers on the company side. But I've long since forgotten what it's like to be in industry shoes, and I'm a regulator through and through. In addition to Jocelyn Strand helping us out today, Victoria Laird is working behind the scenes to make sure that all of you get into your assigned sessions as seamlessly as possible. So if you are not familiar with the MIA, and there we go. If you're not familiar with the MIA, let me just tell you a little bit about who we are and what we do. We are an independent state agency charged with regulating Maryland's $28.5 billion insurance industry. That independent word in the description of our agency is a qualifier for us, in that we don't operate out of the general fund, the state of Maryland's general fund or budget. Our operating expenses are all generated by the fees and taxes that industry pays, as our former commissioner used to say, for the privilege of having us regulate them. But some of the things that are our core responsibilities are: we license insurers and producers. We have multiple insurer and producer representatives in the room, I think, today. And we examine the business practices of those licensees to ensure compliance. And I'm certain that nobody on this call has any compliance issues. We monitor the solvency of insurers. That's one of the core functions of all state insurance departments around the country. For most lines of business, we review and approve insurance policy forms and rates. Rates are generally not prior approval. They're file and use for most things. And we investigate consumer and provider complaints and allegations of fraud. We have a dedicated team at the senior staff level managing our various work units in order to accomplish these objectives. And we, of course, are always available to you, your clients and constituents, et cetera, as a resource. So please reach out to us at any time after today's session that you might need us. So let's take just a quick look at our agenda today. We will start with some historic context around the peril of flood. I think it's important for us to understand where the peril of flood has been, where it is now, and where it seems to be headed. And we will also consider, we'll provide some statistics and data around the flood insurance market, both nationally and here in Maryland. We will look a little bit more specifically into the residential and commercial markets. And of course, as I noted earlier, we'll have time for Q&A. So with that, change our slide here. And let's just kind of take a quick look at some dates in the history of the peril of flood in the United States. And these numbers certainly paint a dramatic kind of picture. If we go back to 1972 here in Maryland, Hurricane Agnes made its way and hit the Mid-Atlantic region, resulting in $2.1 billion of damage, which at the time was the largest amount of damages from a single named storm in history, a record amount. 30 years later, 2003, I was already at the MIA for 3 years at that point. Hurricane Isabel made landfall again in the Mid-Atlantic region. It managed to hit the Baltimore region with a storm surge that coincided perfectly with our high tide. And the result of Isabel is $5.5 billion in damages. And so, 30 years roughly from Agnes to Isabel, and the amount of damages, because Isabel became the new leader, if you will, of most amount of damages from a single name storm. The amount increased by like 150%. And so that's over a 30-year period. You could attribute some of that to inflation, whatever. Not incredibly dramatic. But over the course of 2 years, from Isabel to Katrina, we can see what happened. And the storm in 2005 down in New Orleans racked up $125 billion in damages. And one thing about these numbers, when you're doing research and looking at named storm damage totals, they're generally kind of not precise. They kind of cover a range. I've tended to use some conservative numbers in the sources that I have picked up for this presentation. But between Isabel and Katrina, that's a 20-fold increase in severity. And it would be nice to be able to say that that was a one-off. But of course, we now know, 15 years after Katrina, that is certainly not the case. In 2017, Harvey in the Houston area was another $125 billion event. And the 2017 storm season reached $300 billion in damages. And then we get to just last year, and the 2020 storm season resulted in 29 named storms in a record for a single storm season. And 13 of those named storms made landfall in the U.S., with one of them actually making landfall twice. And so what this crystallizes for us is that the reality that frequency and severity of storms bringing flood damages to the U.S. Have been and continue to rise dramatically. Recently, FEMA reported that the average flood claim has more than tripled from the low 20,000s into the 70,000 plus range over the past 15 years. All of which, brings home the reality that our economy needs to find a way, as the commissioner mentioned in her opening remarks, to manage flood risk. And the insurance piece of that is a significant component for both homeowners and commercial enterprises. So I'm going to talk next about some flood insurance market basics, mostly here in Maryland. And the picture that we paint here is, so, we have some good news, we have some bad news, we have some to be determined kind of developing news. But we all know that, or we should know that, homeowners insurance in particular for individuals does not, for the most part, provide flood coverage. Following Isabel, Maryland implemented a required disclosure for homeowners insurers to let folks know that their homeowners policy does not cover flood. And if you live in Maryland, you get your homeowners insurance policy, at inception, and in some cases every year with your renewal, you get a big prominent disclosure to tell you that your homeowner's policy doesn't cover flood insurance. But despite that, and despite the fact that that disclosure has been around now for 15 years or more, and despite the increasing risk that we just talked about, and the significant consumer education efforts that our CEAU team does year-round, since Isabel, flood insurance take-up rates remain low, not just in Maryland, but around the country. The NFIP has presently about 65,000 in-force policies in Maryland, about $32 million of written premium. And that in-force policy number has been remarkably consistent over the last 10 years. And so it's a little disappointing to not see, all the effort that we put in over time in educating people to the risk and getting that take-up rate to rise. A little bit disappointing to note that. A perfect example of that here in Maryland is between 2016 and 2018, the Ellicott City area of Maryland made national news with an extreme flooding event in a small localized area in Howard County known as Ellicott City, which is comprised of a historic Main Street business district. In 2016, when that once in quote 100 years end quote storm hit, it virtually decimated that Main Street. And we found that out of several dozen Main Street businesses, less than a single handful had a flood insurance policy with the NFIP or any kind of private flood cover. And this is a area of the state, and I've lived here pretty much my whole life, that is a known flood risk going back to Agnes in the 70s. And so the thing that drives home this point that the take-up rates remain low is that less than 2 years later, in 2018, another severe flooding event took place in Ellicott City. And the number of in-place or in-force NFIP and private flood policies on those Main Street businesses, many of whom had gone through a difficult time getting reopened remained virtually the same. For those of us who are in the business, if you will, of trying to educate consumers, that low take-up rate continues to be a thorny problem to try to solve around. And one of the solutions that we are working hard at here in Maryland, and that other state departments of insurance are working hard at as well, is to try to encourage the private market, both admitted and non-admitted writers, to offer flood cover. And on the positive side, both the private flood markets and the admitted markets in Maryland have been growing steadily over the last few years. Between 2019 and 2020, direct written premium for flood, the flood peril, has increased 20%. But you can look at our total market written premium, still under $10 million between admitted and non-admitted. And so there is certainly a ton of room to grow. Our expectation, though, is that both the non-admitted and admitted private market written premium for flood will continue to increase. And we have some sound reasons for feeling that way that we'll talk about. But we're watching closely as the private flood premium starts to grow to see whether that growth trend has a reduction in written premium at through the NFIP program, or whether what we hope will happens, which is that the private flood market will attract some new property owners in the state to purchase flood cover, perhaps for the first time. And so I'll take a brief moment here to pause, and any questions about anything you've seen or heard up to this point, or comments? Feel free to use chat if you would like, but I will press on. Before we look at the top admitted and non-admitted writers in Maryland for private flood, let me just make a brief disclaimer that during the course of the presentation here, if we show or mention one of our licensees by name, one of our writers in either the admitted or non-admitted market, that's not constituting an endorsement in any way of a particular product or a recommendation of one insurer over another. Everything that is in the presentation and all of my commentary today with respect to any specific insurers or their programs is all based on publicly available data and filings. Of course, as the regulator, we don't direct consumers or folks to a specific licensee for a product. Flood market data collection at present is it's less than ideal for a variety of reasons. So it's easy for us as your state regulator to track the written premium in a particular line of business. It is notably more difficult, though, to drill down into that written premium total and determine, for example, whether a specific portion of the premium is residential versus commercial, whether it is a standalone flood product versus an endorsement to a package commercial policy or a package or a homeowner's contract. However, we're working on that, and through the NAIC in particular, they are updating their market data reporting requirements around flood. And we expect that probably by this time next year or the middle of 2022, a clearer picture will emerge about, on a state-by-state basis, about how the flood policy premium that's written breaks down between, again, commercial residential and standalone versus, a package kind of endorsement. What is clear also, as we look at, I mentioned the growth here in Maryland, that upward trend in private market flood growth is visible across the country. And so that's a good thing, and we certainly are doing everything we can to encourage that to continue, and we'll talk some more about that. So we've noted already that homeowners insurance does not provide flood coverage for the most part. There are some exceptions to that. You'll see in this list of the top admitted writers by insurance group for direct written premium for flood here in Maryland. These companies, top 8, write the lion's share by far, 80% or more of the total flood written premium by admitted private writers here in the state. And some of these companies, a handful anyway, or a few, are also, they overlap and they're in, say, our top 20 writers of homeowners insurance. But most companies, as I said, in the homeowners line, they're not writing flood. Chubb is an exception to that, in that they do offer their homeowners policy holders in Maryland a choice between a primary or an excess standalone flood product. And so, that's one divergence from the general rule that homeowners policies don't, or homeowners insurers don't provide flood cover. That home that, for many of us, it's our most substantial investment. And so it, the risk, people not getting flood cover is certainly heightened by the importance of that financial investment, and the fact that a third of all flood insurance paid claims occur to properties that are outside of, the quote unquote high risk geographic locations for flood. And so in those areas outside of those high risk flood zones, lenders don't typically require flood cover. And as we know, most people go without. And so it makes that important financial consideration. It puts homeowners at risk that way. So where do these homeowners go if they are required or want to purchase flood insurance? Historically in Maryland and around the country, that would be the NFIP. It was the only option in the past. The admitted market was generally not interested in writing primary flood cover. Another area of exceptions to that is that there are a handful of homeowners writers who have legacy programs, primarily in the segment for manufactured housing, where they do offer some flood cover, but some of those companies include out of our homeowners writers, ACE, Erie, American Family, Farmers. These are legacy programs, been around for a long time before going back to the origins of the NFIP, really. And those programs in some company environments are still in place. But we do have some interesting and I'll call it exciting news to report, or a positive development in our admitted private flood market. And you can see from this list of the top admitted carriers that Zurich is right at the top. And recently Zurich came to us at the MIA with a new private flood program for homeowners. And that filing has been vetted and approved and will be available for purchase in Maryland June the 1st. And so the ability of private flood insurers to get to a place where, to go from a place where they're not interested in writing primary flood to looking at primary flood as a growth and opportunity area is largely, the genesis of that is largely the big data and analytic era that we find ourselves in now, and the ability of insurers to tap into far more sophisticated mapping and analysis of, flood risks in specific geographic areas. And so this is exciting. It's the NFIP is also moving in that direction, and we have other sessions here today about mapping and the NFIP's new rating structures. So we'll stay away from that particular topic, but we have been working hard, as I say, to encourage admitted writers to get into the market. In addition to these 8 top writers, we have approved some standalone programs from other vendors or licensees. And you can go online these days and just type in flood insurance coverage and find a host of available markets, if you will, or places to go to get a quote. And sometimes it can be as easy as simply typing in your property's physical address. So move real quickly over to our list of the top non-admitted writers in Maryland. And just like we have been encouraging the admitted market to increase their participation in the writing of private flood, we've been doing the same in the non-admitted space. And one of the key components of that is that last year we updated our exportable list, the list of lines of business that non-admitted carriers can write without first conducting a due diligence search in the admitted space. We updated that list in May of last year so that the non-admitted market is now able to write primary flood cover in addition to excess flood cover without a due diligence search of the admitted market space. And our hope is that by this time next year, we will see further increases in the non-admitted space, particularly primary cover for both residential and commercial risks. as well. And so I'm going to take another brief moment here and catch a sip of water and ask if we have any questions or comments about the presentation so far.
Hey, Robert, this is a great place to kind of cut in. We do have 2 questions in the chat.
Great. So I don't know, why am I not seeing the chat? Let me open up the chat. That's probably why.
It should be at the bottom. Do you see it?
Yeah, I will in a second.
Okay.
Jocelyn, I'm going to let you read the first one while I'm fooling around here trying to get the chat screened open.
Sure. So the first question we have, someone would like to know, what is the amount of claims that occur in a non-high risk flood zone? So I guess like an average.
Yeah. So that's a great question. And so to the extent that you might be asking what's the average cost in of a claim in a non-flood zone, I don't have that number readily available. However, the piece that I mentioned briefly earlier is about where flood claims are happening is really an important trend to note, and that is that, you know, FEMA's data reflects that fully a third of all flood claims are coming from outside of the special flood hazard areas. So a third of the flood claims are happening outside of those flood zones that under the FEMA maps to date would require, would have your lender on a mortgage require you to purchase a flood policy. And since we know by the take-up rates that flood insurers, that homeowners are not apt to purchase flood cover on their own if they're not required to by their mortgage company, it's a concern. And I said that I wouldn't get too deeply into the mapping issues, and I don't want to drill down too deep, but this is really interesting. And I kind of learned this recently in preparation for today. The ironic piece of flood insurance in the federal program is that flood insurance in high-risk flood zones or in states, let's say, that have a high exposure to flood activity is often, the average cost of flood insurance there is often less than it is in states that don't seem to have that exposure. And the reason is this growing trend, as Commissioner Moraine mentioned, we're seeing increased frequencies in urban areas that are inland for flooding and from extreme rain events that may not be even associated with a particular named storm. And so to the extent that any of you in your regular activities, even as just individual consumers, you may want to take a look at your own personal risk to flood, the peril of flood, and the improvements that data collection and catastrophe mapping vendors have made in drilling down into where flood claims happen and how extreme they are. That's really what has driven this opportunity for the private market to get into the flood space and responsibly underwrite flood cover for folks who are outside of the areas where flood insurance is required. And so I am going to ask Jocelyn, to read me that second question, because I clearly have a difficult time multitasking and trying to find that chat screen. So go ahead, Jocelyn.
Absolutely. All right. So the second question is someone is asking for us to clear up the difference between the National Flood Insurance Program and the admitted writers.
Yeah, so that's a great question as well. The NFIP, the National Flood Insurance Program, they issue policies. You can get an NFI policy in one of two ways. You can buy it direct from the NFIP, if you do that, the NFIP services that policy. You can also buy that NFIP policy, and I've just kind of advanced the slide here to put this term in front of you, of WYO, which stands for Write Your Own. And the NFIP has this Write Your Own program where the NFIP contracts with private insurers. You know, some of the big name private insurers are part of the Write Your Own program. And in those instances, these admitted insurers do sell the NFIP product. So you might get your NFIP policy from, say, an Allstate or a Nationwide or somebody else. That is, although Allstate and Nationwide are examples of admitted companies, when they sell the Write Your Own NFIP product, they're not operating in that admitted space. In other words, we as your state regulator do not have a direct regulatory authority over anything that happens in the NFIP arena, including the activity of the Write Your Own carriers who are part of the admitted market. So I hope that answers that question. Jocelyn, do we have any more, or are we caught up?
We're all caught up.
Okay, great. And we are kind of flying quickly towards the end of our time. So I'm going to real quickly highlight what some of those coverage limitations are in the residential and commercial markets. So in that NFIP market, if you're looking to purchase a flood policy for your home, you have a single peril of flood, you have no loss of use that's covered, and you have limitations on the amount of coverage you can get. $250,000 for dwelling, $100,000 for contents. While those amounts are sufficient to cover that average $70,000 average claim that I mentioned, it would not certainly be sufficient to cover, say, a total loss of a dwelling due to a covered flood claim in certain markets. So that's a limitation that exists there. In the admitted market, I mentioned that there are limited coverage options, but we see that improving over the next few years through new filings. In the admitted market and in the non-admitted market as well, both markets can write higher limits if they choose. They can add additional kind of bells and whistles and coverage beyond just the basic flood damage. They can write loss of use, and they can write lost business income, for example. And so as the admitted and non-admitted markets explore writing more and more flood, and as the years move forward and they get a better handle on their loss costs and experience, they will hopefully be able to provide more comprehensive offerings than you find through the NFIP. And I don't foresee that at any time in the near future, the private market, admitted or non-admitted, is going to replace what is available in the NFIP. What we are seeing in these early days of increased participation by the private market is that in some cases, private market cover is more expensive than the federal cover that's available, and in other cases it's the reverse. And every consumer or business owner has their own set of risk tolerances and considerations to apply when looking to decide, who to get cover from and where to get it from. And I see I've now found my chat screen, and I see that from Heather, the question that the federal government regulates the NFIP, and the answer to that is yes, you're correct. The NFIP is a complete federal program, and we interact very closely as a state regulator with our partners at the NFIP, but at the end of the day, they have full regulatory authority over their program. Okay. I have seen my 5-minute warning come and go up on the screen, so I'm going to put one quick last call out for any questions in the chat, and if you have that, by all means, put that up. And while I'm doing that, I'll just move to a couple of quick closing remarks and sort of public service messages from the MIA to our audience today. If you are not familiar with the MIA's website, we strongly encourage you to use it. It's up there, www.insurance.maryland.gov. We have great resources available there, and not just about flood, but about all things insurance related. You can sign up for our social media feeds and channels right on the homepage of our website. It takes 2 seconds to do it, and that will get you real-time notifications of important announcements from the MIA, as well as advanced notifications of events like this. And our next big event that is coming up, and that's actually tied to flood, is May 4th. We have an industry meeting for hurricane preparedness. So with that, I'm going to say thank you again for your attendance, your time and attention today. If you have more questions, sign up for a breakout room, or reach out to me personally at my email or phone, and we will be thrilled to help you out. Looks like I have 30 seconds left.
And we have one more question in the chat.
Oh, absolutely. I see it. Yeah, so the private flood policies, the big advantage would be you can get broader coverage. You can get more dollar limit coverage. You can get loss of use coverage. You can get coverage with perhaps better options for individual risks. So it is a